It's Sunday night. You're staring at silver on your phone. Green candles, fast, violent. The kind of move that makes your heart beat loud. Then it freezes, not slow, not laggy, frozen. No new quotes, no new prints, no way out. Your broker app spins like a slot machine that swallowed your ticket. And you're sitting there, leveraged, in a market that just went dark. That's not drama. That's the nightmare setup traders are flirting with right now. Margin shock, silver whipsaws, and a halt risk environment where the doors can lock while your chips are still on the table. Here's the part nobody says out loud. When the system gets stressed, they change the rules. Mid-game, with your money still on the table, they don't warn the sleeping herd, they squeeze them, quietly, and they call it risk management. Silver isn't just a metal, silver is a pressure gauge, and when that gauge starts screaming, the corrupt system does what it always does. It tightens the noose. Now listen to me. If you're 55, 65, 75, and your life savings are tied to paper promises, you're standing on a dock while a storm is rolling in. And the people who built the ship, they already have lifeboats. You don't? Not yet. Let me show you the mechanism, the invisible trapdoor, the one that wipes people out without a headline. Margins. On COMEX, one silver futures contract controls 5,000 troy ounces. 5,000. That's not a trade. That's a truckload. That's a semi on the highway. Now ask yourself a simple question. If one contract is 5,000 ounces, what does a $1 move mean? It means $5,000, up or down, in your account, in a blink. Now think like the house, not like the player. When volatility spikes, the house raises the cover charge. CME clearing raised performance bond requirements for COMEX silver futures more than once as conditions tightened. In mid-December 2025, one advisory showed initial margin around $22,000 for non-hedging positions. Weeks later, late December 2025, another advisory lifted that initial margin to around $25,000, effective after the close and into the next session. That's not a gentle adjustment. That's a hammer, and it lands the same way every time. You don't get a choice, you get a demand. Post more cash, or we liquidate you. You can be right on price and still get wiped, because leverage doesn't care if you're right. Leverage only cares if you can survive the ride. Now do the math like an adult. A $5 move in silver, that's $25,000 per contract. That's the entire new margin requirement. In one swing, one whip, one snap. And silver doesn't move like a polite stock. Silver moves like a knife fight in a casino alley. Up, down, snap. And the herd says, silver is crazy. No, silver is honest. It's the system that's crazy because the system is built on confidence, and confidence is a thin sheet of ice. Margins are not there to protect you. Margins protect the clearinghouse, they protect the plumbing, they protect the casino. And margin hikes do one thing better than anything else. They force weak hands to puke positions at the worst possible moment. That's why the chart looks like a heart monitor in a horror movie. That's why you see the whipsaw. Because the moment they tighten requirements, people scramble. They sell to raise cash. They sell into weakness. They sell because they have no choice. Now here's the open loop. If margins can change overnight, what else can change overnight? Hold that thought, because the next part is where most people lose their stomach. Let's talk about the safety net, the bedtime story. FDIC will save me. The government will fix it. They wouldn't let it happen. Okay, read the fine print. FDIC insurance is $250,000 per depositor, per insured bank, per ownership category. That's it. And when a bank fails, yes, the FDIC has historically paid insured amounts quickly, often the next business day. But that's the insured piece. What about the money above $250,000? That becomes a claim against the failed bank's estate. A claim, not cash. A claim is not groceries. A claim is not medicine. A claim is not rent. A claim is a promise from a wreck. And here's the cruel part. Most retirees don't even realize they're over the limit. They have a savings account, a money market, a CD, and a joint account, all at the same bank. They think it's spread out. It's not. It's a stack of paper in one burning building. Now, before someone says, that won't happen, let me remind you, even the market itself can go dark. In November 2025, CME trading was halted for hours after a disruption tied to a data center cooling failure. That means global futures markets can pause. Real life. Not a movie. The casino can lock the doors while your chips are still on the table. That's halt risk. And it's not science fiction, it's infrastructure. It's fragility, it's one weak link. Now say it with me. This isn't a theory, this is math. If you're leveraged and the margin requirements jump, the market doesn't even need to beat you. It just needs to force you to sell. At the bottom, like the Titanic loading lifeboats, but charging admission at the ladder. Now we go deeper. Because margin shock is only the surface. The deeper problem is control. Control over movement, control over access, control over your buying power. And the government has been laying tracks for this for years, not with a flashing neon sign, with paperwork. Executive Order 1.06 pointed agencies toward coordinating around digital assets and evaluating a potential U.S. central bank digital currency. The Federal Reserve put out a major discussion paper on money and payments, asking questions about a possible digital dollar, and the Fed launched FedNow in July 2023, an instant payment rail that moves money in real time. Now, let's be clear, FedNow itself isn't a CBDC. It's a rail. But rails come before rules. Infrastructure comes before enforcement. First they build the highway, then they decide who gets a toll pass. And while all of this is debated, there are political pushes to block a CBDC, like the Anti-CBDC Surveillance State Act, introduced as H.R. 1919. Why does that matter? Because it tells you the quiet part out loud. People in power know this tool can become a surveillance lever. Now, I want you to feel the risk, not intellectually, in your gut. Future pacing time. I'm going to make you see it. Imagine this. You wake up. Gas tank low. Grocery list in your hand. It's cold outside. You go to pay. Declined. Not because you're broke, because your transaction got flagged. Maybe you bought too much metal. Maybe you withdrew too much cash. Maybe you donated to the wrong cause. Maybe you traveled. Maybe you said something online that the system didn't like, and now your spending is under review. Your bank tells you it's temporary. Customer service says, we're escalating it. Escalating. Like your bills can be escalated. Like your prescriptions can be escalated. Like your heating bill can be escalated. Now imagine this. You're trying to move money to cover a margin call because silver just whipped down $3, then up $4, then down again. And your broker emails you, immediate deposit required. You have 2 hours, but your transfer is pending. Your app won't send it, the pipe is clogged, you're watching your position drown while the lifeboat is tied to the dock. That's the trap. Not just price risk, access risk, counterparty risk, system risk. Now, if you think they would never, remember, markets have price limits, trading halts, exchange outages. CME itself explains that when price limits are hit, markets can halt temporarily or remain in a limit condition depending on rules. Translation: when it gets wild, the machine can pause and you don't get to vote. And when the machine pauses, the little guy panics. The big guy prepares because the big guy has liquidity. He has lines of credit. He has relationships. You have a password in a phone. Now here's another open loop. If the system can pause trading, can it pause you? Hold that. Because we're about to talk about the part they never advertise. Now we talk survival, not returns, not portfolio allocation. Survival, freedom, bearer assets. Because the moment you understand counterparty risk, you stop thinking like a trader and you start thinking like a central bank. Here's the simplest truth. If your wealth exists as a number on a screen, it depends on permission. Permission to access it. Permission to move it, permission to spend it, and permission can be revoked with an email, with an algorithm, with a policy update. That is the modern cage, a velvet cage, comfortable, until it locks. That's why the awakened few hold something different, something you can touch, something that doesn't need a password to exist. Physical gold and physical silver are not just investments, they are exit doors, they are lifeboats. They are the one form of money that doesn't ask a third party. May I? Let's name the monster, counterparty risk. Counterparty risk is the risk that someone between you and your money fails. Your bank, your broker, your clearinghouse, your payment rail, your exchange, any link breaks, and you're staring at a locked gate. Now compare that to physical metal in your possession. No counterparty, no middleman, no permission slip. It just sits there, silent, patient, like a fire extinguisher. You don't buy a fire extinguisher because you want a fire. You buy it because you know fires happen. And when the fire starts, the guy who bought the extinguisher looks like a genius. Not because he's smarter, because he's prepared. Now, let's talk about silver specifically. Silver is the people's metal. It's used in industry. It's consumed. It gets tight. It gets squeezed. And when leverage piles in, you get exactly what we're seeing. Whipsaws, margin hikes, forced liquidations, a setup where the herd gets tossed overboard and the insiders buy the wreckage. Remember those numbers. Around 22,000 initial margin, then around 25,000 in weeks. That's the noose tightening. And the crowd doesn't understand it. They think silver is random. No, the pressure is engineered by rules, by requirements, by the gatekeepers. And when they raise the bar, people fall. Now let me bring this home to you, because if you're 55 plus, you're not chasing thrills. You're protecting a lifetime. You're protecting mornings on the porch, grandkids in the living room. doctor visits that you can afford, a pantry that stays full. Now imagine this. It's 5 years from now. Inflation didn't go away. It just changed clothes. Your grocery bill is still climbing. Your insurance is still climbing. Your taxes are still climbing. And your savings account, it's paying you crumbs. Meanwhile, the headlines say everything is fine. They always say that, right up until it isn't. And then they say, nobody could have seen this. That's the oldest lie in the book, because the insiders always see it. They just don't tell you. They position first, they hedge first, they buy hard assets first, and they let the sleeping herd hold the bag. This is the us versus them line in the sand. Us, the awakened, the ones who can still do basic math, the ones who can still recognize a rigged table. Them, the system, the agencies, the banks, the talking heads who tell you to trust the same people who caused the mess. Now here is what traders must watch right now, not opinions. Signals. First, margin advisories. When margins rise, the pressure rises. It's like tightening a tourniquet. Blood flow stops. Second, violence in price. If silver is whipsawing fast, wide swings, expect forced liquidations. Expect stop hunts. Expect air pockets where price drops like an elevator. Third, any sign of market stress, outages. Limit conditions, halts. Because when the pipes clog, liquidity evaporates. And when liquidity evaporates, the little guy gets trapped. That is the halt risk setup. Now, I'm going to say something that will anger some people. Good. Because it needs to be said. If your plan depends on a promise, it's not a plan. It's a prayer. And prayers don't clear margin calls. Prayers don't refill shelves. Prayers don't fix a frozen payment system. So what's the exit? The exit is not more risk. The exit is not more leverage. The exit is ownership, control, hard assets. You become your own central bank. That doesn't mean you hide in a bunker. It means you remove weak links. It means you stop outsourcing your survival to people who don't know your name. It means you build a financial lifeboat that works, even if the lights flicker. Now, let's make it practical. When you hold physical silver and gold, you're holding bearer assets. No counterparty. No corporate logo. No promise. Just value. Historically recognized, globally accepted, and most important, outside the digital cage. Now, does that mean you abandon everything else? No, it means you balance reality. You ask a hard question. What happens if I can't access my money for a week? Not forever, a week. What happens if an outage hits? What happens if a bank reviews transfers? What happens if volatility spikes and margins jump again? What happens if silver rips, then dumps, and the exchange pauses? If that thought puts a knot in your stomach, good. Because that knot is your instincts waking up. That knot is the part of you that still knows how to survive. Now, I want you to see one more scene. Imagine this. A friend calls you. He's panicking. He's telling you his account is locked for security. He can't pay his bills. He can't move his money. He's asking what to do. And you open your drawer. You hold something real, something that doesn't need permission. That moment, that's the moment you realize what money actually is. Money is not a number. Money is optionality. Money is freedom of action. And in a system that can pause, freeze, and review, freedom of action is everything. Now, you might be wondering, why silver? Why not just cash? Because cash melts. Inflation is a slow theft, a silent theft. It steals the years you worked. It steals the hours you traded for dollars. And while they tell you inflation is cooling, your grocery receipt tells the truth. Your insurance bill tells the truth. Your property tax tells the truth. Cash is necessary, but cash is not safety. Cash is a tool, and tools can break. Now, you might ask, why not just paper silver? Why not an ETF? Because paper has counterparty risk. Because paper is a claim. Because a claim is not the thing. Just like FDIC above 250,000 becomes a claim. Just like a broker statement is a claim. Claims are fine until they're tested. And the only time claims matter is the time they fail. Now I'm going to close the open loop from earlier. If margins can change overnight, what else can change overnight? Rules, withdrawal limits, transfer delays, new reporting, new restrictions, new temporary measures that never end. That's how control works, not with one big announcement, with 1,000 small steps, like a frog in a warming pot. The sleeping herd doesn't notice until it's boiling. But the awakened few, they notice early. They move early. They prepare early. That is what we do here. We don't panic. We position. We build lifeboats before the water reaches the deck. So here's your final warning. If you are trading silver right now, watch the margin notices like a hawk. Watch volatility like a storm radar. And understand the brutal truth. The market can be right, and your timing can be right, and you can still get crushed by the machinery. because the machinery doesn't care about you. It cares about stability. It cares about the pipes. And when the pipes are threatened, they do what they must. They raise margins. They pause markets. They protect the house. Now, here's your move. Protect yourself, reduce counterparty risk, own hard assets you can touch, gold, silver, not as a bet, as a lifeboat, as survival, as freedom, as the ability to say no. No to permission, no to freezing, no to the digital leash. Now, if you want to survive what's coming, subscribe to AG Finance Family, not for entertainment, for awareness, because the people who get hurt the worst aren't the poor, it's the people who almost made it, the retirees, the savers, the ones who did everything right, and trusted a system that changes the rules when it's under pressure. One last time. Imagine this. It's the day you need your money the most, and the screen says unavailable. That's when you'll wish you owned something that didn't need permission to exist. Hold the line. Be your own central bank, and don't be the last person waking up.